All right, let's take a look at the Dow Jones Industrials INDU would be the symbol for stock charts. The most probably followed index, although with only 30 stocks in it, it doesn't give us the best indication, but we will take a look at it nonetheless because it sets up like all our other charts, and it does not look good for the bulls. So this is that update, TA, for Tuesday, May 8th, 2012, going into trading May 9th, 2012. And let's take a look at this chart. The first thing that sticks out, as I said on Face the State this weekend on Reno television, 10,404.49 was the October low, and to go to 1338.66 and do that prior to May, and do that in basically 6 months is insane. That's 2,934.17 points. That's 489 Dow points per month. That's there have been years where the Dow hasn't moved that in 2 years, much less 6 months. So anyway, if we take a look closer at this chart, we'll see that the channel that is bullish that led us all the way to the end of April high of 338.66 is set up here, where the channel starts at 10,604.07, goes up to the oversold bounce that happened in August of last year of 11,529.67, and now we have the outlines of our bullish channel, and it goes right up through here. And believe me, there is rhyme to reason with this channel. You can see it perfectly. Here it is again, the bottom of it. So once we created it, we topped out up here, and you can see that the channel is nearing a top again, just like the S&P 500, the 1338.66 that just did pierce the top of the Bollinger Band, just like that on the bottom side here. Now, what gets to be extremely fearful is the low on the Dow yesterday, I guess Tuesday, because we're doing this in Wednesday, 12,810.39 was the low, closed at 12,932.09, so a little bit of a bounce off of that, but you can see here that the Bollinger Band still is in massive play, and any loss of it, and we're down to 12,534.38, which would be the first retracement. But let's not take that one, because what has happened here is we have actually pierced through the top of this channel. So let's use one final color here, if you will, and now we can take this range. I'm not going to leave it up there because it'll cause way too much confusion, but you'll see it here. The first retracement is 12,650.70. So let's remember that. The second retracement, as we move this over to be able to see it, is 12,438.19, and you can see the extension there of the purple line, which is right over here at 12,457.04. That purple line is actually the 150-day moving average. So the way the Dow sets up right now is we can do a couple different things using this channel. We can do what we just did there, and we can create retracements, and the 38.2 points out extremely well. So 12,285 and 12,534. We can do that. We can also take the bottom of this channel and the extension. We didn't do this on the other indexes, but we can do this to get an indication. We'll use the same color again, and we can take the top of the extension, or the bottom of the extension here, which is just about right there, and we can extend up to the 13,338 again, and we can see that we are already through some key points. Now take a look at the 12,892.88, and you can see 12,810.39 was the low, and you can see that 12,892.88 we did close just over it, but now it looks very much like we're going to open under it, and that brings 12,755.18 into play, which is under the 12,71.48. And the final retrace of this range looks to be 12,617.47. That's about the area that I'd be looking for before we get any kind of bounce down to the 12,534.38. So that's what we're looking at there. The volume did increase today, as we always look at the volume, and the volume did increase. So we like to see that as the index sells off. And of course the RSI, we're under it. We're under that 40. We're under the 50, which is a bearish indicator in itself, but now we're under the 43, and odds are we're going to get oversold to 30 here relatively soon. So the Bollinger Bands that this index has been trading off of, the 12,781.48 did hold today on the Dow, but you did not get a close anywhere close to 1355.20, and so 12,781.48 comes into major play here today, probably relatively early in the day. We'll see, but this market, with what's going on in Greece and the Eurozone, not looking good. So that's where we're at with the index. I really don't see much of a bounce. I think 12,710.56, that range here with the support line, is something that the bears will take out. I would not touch this market in any long configuration whatsoever unless 12,534.38 is broken, and then right back up over it. So a loss of 12,534.38 and then a move back up, might consider getting long there. But this is a market right now that went parabolic, or actually an index that went parabolic. It did it right here. It didn't get as completely out of hand as the Nasdaq did, or even the S&P, but nonetheless it still get out of hand. So 76 was what the down move was yesterday. I'm looking for triple digits today. I don't know how much buying there will be, because the first retracement of the entire range gets us down to 12,217.81. The first retracement of the range on the breakout of the channel gets us down to 12,534.38, and then the retracement of the top of the channel gets us down to 12,294. So we're not close to any of those, and in order to have a healthy index, you've got to go down there and test those. But I'm looking closely at the 400-day moving average at 12,000. So anyway, there's not any bullish news in this whatsoever. So that's going to do it for the Dow Jones INDU on stock charts daily TA for the close May 8th, Tuesday 2012, going into trading for May 9th, Wednesday 2012. More to come. Alright, and finally today, going into May 9th, trading for the close on May 8th, Tuesday. Our day would not be complete without, of course, Apple, its own index, although it's been rough for Apple, as we predicted it would be right after earnings, when we predicted that 620.25 was not busted, and the high was 619.95. So sorry, we missed that by 30 cents. We said to strongly consider selling into the topping anywhere from 610 to 620 and look for a massive drop that would eventually take us to 520. We got all of what we predicted in almost a week's, half of what we predicted in almost a week's time following earnings. And now, as of today, Apple went down even further as it found a level of 558.73. Now, there's the black line or black circle. I want to use it again right away and show you the ideology indication of this, how these come together. And there you see it, 558.73. Apple did hold the bottom of the Bollinger Band, which is 551.32, and this stock has traded relatively dead on it. Today I don't look for the Bollinger Band to hold. I don't therefore look for 555, the recent low that actually came ahead of earnings, to hold. Once 555 is gone, we have taken out anybody that decided to buy Apple into earnings for the 555 move to 620. We've also taken anybody out in the psychology of it that bought at the 555 area, was looking for new highs, didn't get 620 plus, and now they're going to be washed out on any loss of 555. So I really think that the first retracement point on this range here to here, the high, which is the 542.31, is a lot closer than Apple investors may think. In fact, I think that level could come today. We would be at an oversold level on the daily if we got down to the 520. So as much as I hate to say it for Apple bulls that did not listen to the strong indicators that stated with this channel that we would see 520, it looks very much like we're going to see 520. So remember, the way that this range will stay bullish for a year and stay absolutely gorgeous, actually, will be any hold of 579.53. What I love about this chart is that's over a 50% retracement of the year high low, which, believe it or not, on Apple is 310.50. So the best retrace we could possibly have is anything that holds 477.25. I don't see Apple getting that bad. Then again, that level that really sticks out to me is that 451.80 spot, which is the 200-day moving average on Apple. But we won't look at that right now. I really believe we're going to get a big bounce on any hold of 515.78, which would be a 100% retracement of the December low that was the second indication off the channel. I don't like how it didn't catch the channel here. I don't like how it didn't catch the channel there. I don't like how it didn't catch the channel there. We got an indication here, but we did not get identification and follow through that it was true until we got here. So it was a hypothesis that became a thesis on this chart when it hit that point there. There's where Apple busted out off of that low. We want to take the low in the range and use the bust out point where it busted up through the top of this channel and actually created a move double the size of the channel. So this level from here to there is almost exactly double. So a really solid retrace level, you can see, would be 477.25. But again, the first retracement level that we're going to look at is the green line here, and that's 516.60. So again, Apple 568.18, pretty good size volume yesterday. What we'll look for today on Apple is again the 551.32 not to hold, and meanwhile the 555 not to hold. The loss of that should take us down. I'll look for a bounce today at 542. It's going to be a dead cat bounce back up to test, most likely, and make former support new resistance on the 50-day moving average. But that's what I'm looking for. We'll pull down and take a look at the MACD here. It's still in what we call free fall, and they're actually divided even more now than they were. You can see it up here as it rolled. So that's not good at all. That's extremely bearish. And the money flows are what are really curious on Apple. And what that tells me is that the move up at ahead of earnings that bounced underneath that 50-day moving average was shorts. Meaning this level right here, when that busted, shorts got, or I'm sorry, right here, when we went from the call it the 579 area, when we had the 50-day moving average prior to earnings, down to the 555, the shorts that were in this stock said, okay, I'm going to cover, I'm going to take my profits, I'm going to get long. They got long, and you see the huge squeeze ahead of the great earnings, and then the big move up. You see the black line, which is a doji indicator, double doji, and then straight down ever since then. Now, the question is, and the answer is pretty easy, are those shorts that covered up that literally covered down here, went long, and then did not, basically stay long, they got short again, selling into the strength, are they going to cover on the loss of 555 today? I don't think so. And I think you're going to have more shorts come in, and you're going to see 542 probably as early as today. So I would strongly recommend staying away from Apple on the long side. And again, our 520 is a lot closer than most people think. And of course, I know I was called crazy to say this thing after earnings would pull back 100, but we're less than 40 points from just there. So again, that's Apple, and Apple it stays red for bearish. We will leave it that way, and this has been your Apple Daily TA update for the close on May 8th, 2012, going into trading for May 9th, 2012. More to come.